IT professional Brendan Mishka, his wife Gory and their buyer's agent are inspecting a house in outer Sydney. They're looking to buy their first home, but despite good jobs and a deposit, they're finding it tough.
I think we're competing with a lot of people that would be happier to take a lot more risk.
Property consultant Edwin Almeida has spent 25 years in the real estate game.
I haven't really seen anything as hot as what is at the moment.
At $1,100,000 the call.
And CoreLogic's latest house price data backs that up.
Sold, congratulations, well bought.
Over the month, Australian dwelling values increased 2.8%. That's the highest growth rate we've seen since October 1988, and it's pushed values 6.2% higher over the year.
The Sydney market has regained its unenviable title as the front-runner with a 3.7% gain in March. For the first time since the pandemic started, capital cities outperformed the regions. But if you think Australia's property market is red hot, try heading across the ditch. Prices in New Zealand are up more than 20% over the past year, 25% in Auckland.
The economy picked up where it left off, only with lower interest rates, so the housing market has massively outperformed expectations.
Like Australians, New Zealanders were already dealing with record mortgage debts before the latest boom.
32, 35, good work sir, 35, stay in front, that's where you need to be.
Unlike Australia, regulators have started doing something about it. The Reserve Bank of New Zealand has had limits on low deposit loans since late 2013. It temporarily dropped them during the pandemic.
In the end, they put them back on earlier than they had anticipated, and the banks themselves actually front-ran that and put them back in even earlier.
But that wasn't enough for the Ardern government, first elected on a platform of improving housing affordability. The Labor government has taken matters into its own hands with changes to New Zealand's property taxes.
In previous times, capital gains in New Zealand have generally been untaxed on housing. It's now a very strict rule that anyone that sells a house previously within 5 years, now anyone within 10 years has to pay tax on those capital gains.
Even more controversially, it's removed tax deductibility on mortgage repayments.
Now investors can't claim their interest payments to lower their overall tax burden.
The change already applies to new investments, and there's a 4-year transition for existing investors. Some analysts have predicted it will flip New Zealand property prices from 20% gains to 10% falls. But Brad Olsen disagrees.
We're not expecting that house prices drop anytime soon because there does remain still a significant undersupply of housing in New Zealand.
But what does this all mean for Australia? ANZ's economists on this side of the ditch see us on the same trajectory as New Zealand, just several months behind.
Australia is fast catching up, and so on our expectations, by the end of the year, house prices up about 17%.
A growing chorus of analysts now see it as almost inevitable the banking regulator will take action soon.
They could introduce caps on higher risk lending, like lending where there is a high debt to income ratio or lending where there's a high loan to valuation ratio.
So far, the head of the bank regulator is sitting tight, playing down a recent rise in low deposit loans and mortgages that are at least 7 or 8 times the borrower's annual incomes.
It's pretty highly correlated with what is a significant increase in the share of first home buyers. It's not clear to me that's a problem that we should be doing anything about.
Aspiring first home buyer Brendan Mishka may not agree.
The size of the loan, it's kind of intimidating compared to the income, and thinking how long it would take to pay all that back.
He and his wife don't want to get pushed into a lifelong debt trap to buy a place to call home.